Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is April the 3rd, 2020, 8 a.m. So I'm opening things up. I'm taking a look at the gold miners. This is NUGT, one of our long positions, and we were down. We're now coming back and flirting with resistance at, I'd say, 8.10 to $8.14 per share, and we'll probably get through there today. But let's get to the major averages. And I want to talk in a moment about the valuation of the market, because I get concerned about, you flip on CNBC. I listen to it sometimes, and I try to avoid it, to be honest with you. I used to listen to it constantly. But you listen to it and you get worried that people are getting lured into a false sense of we're back to normal again. And I want to bring up this chart. I brought it up last night on Thursday Night Stock Charts Live. I'll link to it at the end of this video. It's on YouTube. And I brought up this chart here. Good morning, Franklin. And here's where we were back in December, January, and into February, and then of course we corrected. Here we are now. Sam, good morning. RL, good morning. Sam, how are things over in Italy? I think looking at the statistics, it looks as though you're leveling off over there. Is that fair to say? Hopefully, fingers crossed. So here we are. I spoke about this in great detail last night. I don't want to repeat myself, but I believe that what we're seeing right now is a, good morning, Kat. What we're seeing right now is a counter trend rally, and that in all probability we are going to roll over. Do we make lower lows? I don't know. I'm not that smart, but in all probability we will. Why? How do I come to that conclusion? I'm not simply just going to use historical data and technical analysis. I'll use something I rarely do, and that is more along the lines of valuation. And if you take a look at the S&P 500, here's a zoomed in view on the right side here. So if you're wondering what this is a zoomed in view. This is our closing price yesterday, 2526.90. This is not completely updated here, this zoomed out version, but you get a feel for where we're at. And here's the table of the meaning of the colors. In red, PE equals 20, overvalued, 20 or greater. PE equals 15, fair value, historically fair value. PE equals 10 or undervalued, in green. Now, going into 2020, we were overvalued, clearly well overvalued. This has not been updated yet for Q1 2020 earnings and forward-looking guidance. So I could think easily, or I would think easily, that in all probability, that when we get earnings that are reported for Q1 2020 in a few short days, that we will be, if we just stayed where we're at or higher, we're going to be overvalued yet again, and we need not tick up one single point in this market. Historically, we bottom out well below undervalued. PE 10 or lower, that would be a signal that the market has bottomed. We are nowhere near that level yet. So to think that you have the talking heads coming on CNBC talking about value, what value do they see? You have the analysts that can no longer forecast guidance because they're not getting information out of the companies, because the companies don't know. So Have we seen a bottom in this market based upon the fact that we have no idea what earnings will be for Q1 and what forward-looking guidance will be for Q2 and beyond? Yeah, I think we're overvalued. I think that we are, in all probability, at a bare minimum, going to retest historic lows. And all you need to do is simply take a look at times gone by. Here's a financial crisis. Did we have bear market rallies back then? Absolutely. We had several of them. And all of them, with the exception, of course, the last one, did not end well. Good morning, Tommy. It's still expensive. People like to discount, buy under 50% of fair value. Agreed. Good morning, Eric. Oh, okay, Sam. Spain, yeah, Spain's getting hit hard. Really, really hard now. Okay, good. Good to hear. Good morning, Richard. Okay, so is the stock market overvalued? I believe so. And I wish I could come on here and say, listen, go buy stocks. That's not my job. Can we move higher? This is a daily chart of the spiders. Can we move higher here? Sure. We're down this morning. Can we rally off the lows? Sure. Can we rally up into resistance? Absolutely. Would I be leaning into the short side? In all probability, yes. Let's get to the pre-market. Oh, before we go to the pre-market, 8:30 in a few short minutes, we're going to get non-farm payrolls, and I suspect that it's going to be a ugly number. So buckle up. Forget about that. Was it 3.7% unemployment rate? That's going away. So 8:30 Eastern Standard Time, non-farm payrolls. Let's get to the pre-market activity. All right, waking up this morning after a bullish day yesterday, especially on the Dow Jones. Not that it's the end all and be all of the markets as it once was, but outside reversal day, a very bullish day yesterday. We're down this morning. The Russell closed off the highs of the day, and what I've been looking at of late, I talk frequently about bear flag setups, and you saw one here. This is an hourly chart, and we broke down yesterday, and right now we're consolidating in an effort to try to regain momentum and try to rally back here. Now, I think what may happen here is exactly what they did to the U.S. dollar, because the dollar had a bear flag set up, broke, and what did they do? They rallied it, and I think it's because of fear on the dollar. Nobody's going to go to stocks out of fear, so it's going to need a different catalyst to send it up higher. And the dollar's overbought. Can it head higher? I suspect that it will. We went over a monthly chart of the dollar last night, and it broke out last month. It closed at the highs of the month, but just like the traders did back during the financial crisis, the initial knee-jerk reaction was a flight to the U.S. dollar, a flight to treasuries, and at some point in time, at some point in time, that will fade. Good morning, Oliver. I agree, RL. Yeah, no doubt about it. I mean, even your unemployment numbers from this week, they didn't even have all the applications completed yet. So Lord knows what the real number is. The NASDAQ, we're down about a little over a quarter. Now we're nearly down almost a third of a percentage point. Same deal here. We were in a bear flag setup. We broke it. We've been making every effort to try to recapture. And I keep it simple. This is the reason why. One of the reasons why we've been leaning into the short side yet again. We booked profits on our shorts earlier in the week. Now we're stepping back up and we're beginning to reopen short positions yet again. Why? It's because I don't believe what the talking heads are trying to feed us on CNBC. I think that we are ultimately going to break here. Let's take a look at bonds. I'm very suspect of, we're short of the bond market, small opening position. We're down on that trade right now. I just want to have skin in the game because I'm getting an eerie feeling that we have a problem in the bond market and the Federal Reserve may have some problems here. This is an hourly chart. Let's go to a 4-hour chart. Isn't it strange that with yields at all-time lows, or very close to all-time lows, we are still well off the highs on the 10-year. It looks as though, in all probability, we're going to probably move up higher. But when you take a look at the TLT, let's go to a new chart here. This is the 20-year bond ETF. We're short using the TBT. And I can't cover that short yet because what I think may be setting up here is a sucker punch. And it's a big maybe because you're betting against the Fed. We did break out or recapture support on the 27th. Then we gave it up. And ever since then, filled candlesticks, meaning that you're seeing selling into strength. And we've been unable to break out despite the full faith and credit of the Federal Reserve saying they're going to be there. So I'm worried about a break in the bond market, and that would mean a spike in yields. And that's the last thing that Americans need right now are higher borrowing costs. So we'll see. Ideally, we get a breakout and yields stay low, but I'm worried. I'm very, very worried. Let's get back to the charts, pre-market. Check out the VIX. Over the weekend, we spoke about the VIX in great detail. We were looking for the VIX to come off, and it has come off quite a bit. But it's consolidating at current on this 4-hour chart. Let's check out some commodities. Silver and gold. We'll go to gold first since my pointer's there. We're now positive. We were down earlier. And I want to point out to people, and we've been very bullish on gold for quite some time now, that we have an inverted head and shoulders setup forming. We haven't broken out yet. Let's clean this up. We'll start fresh. This is what I'm looking at as my neckline. And if we break out and through this neckline, I think that we're probably going to all-time highs fairly quick. And I want to point out something. The dollar is strong, yet gold continues to rally. Now, gold is priced in the US dollar. Think about how strong gold would be were it not priced in dollar terms. It's already at all-time highs in euro terms, Canadian dollar terms. I don't think Swiss franc terms, and I think that's the only other major currency that gold has not broken out of yet, besides the US dollar, to new all-time highs. Here's our tripwire, and it's been triggered. We're breaking out here. We haven't closed yet, obviously. This will close at 9 a.m., this barb, but we're fairly close to it. Watch for a pullback and a retest, but I think that ultimately we are going a lot higher here on gold. And again, we're long of, not gold, we're long of the gold mining stocks in a very, very, very big way. Long of silver. We were buying silver when it was it was just getting pummeled, and we had, I'll never forget it. We're buying silver with a gold silver ratio was at 122. So very, very cheap relative to the price of gold, and I'm probably not selling it for a long time. It's not a swing trade, it's a long-term play. Well, I think we're up about, we have the leveraged DTF, we're up about 48% on that trade since mid-March. So I'm not selling that. So gold, now positive. Oh, actually just went negative. So we'll see whether or not we close above this resistance level, 9 a.m. Eastern Standard Time. That's when that bar closes. Let's go to silver. Now, silver is very volatile due to the fact that it's perceived to be a industrial metal as well as a precious metal. So extremely volatile. But as you can see here, we did have, it's a stretch to call this an inverted head and shoulders setup, but what the heck, it's my show. So we have an inverted head and shoulders setup. We've broken out here. It looks like we're moving up higher. We're coming off the highs of this bar. But I think ultimately, given the economic data that I expect to be released shortly, that we're going to see a bid under the precious metal names. Because the headlines are just simply shocking. I mean, never in recorded history have we seen 10 million new unemployment claims. I mean, it's shocking. Yet the stock market went up. Think about that. Somebody in the government in there? We're looking to lean into the short side of technology. We hate beta right now. Anything growth, we want to lean into the short side. So we're avoiding technology and betting against it. Utilities, we own, warming up to. We're waiting for that next leg down in the markets. Let's see whether or not the utilities break or do they hold. So I'm not ready to go adding more there yet. All right, let's take a couple of chart requests. Yeah, well, gold is looking outstanding. It's just getting primed right now. And you can't buy it. You can't buy bars, coins, and that goes for silver coins as well. Marriott, MAR, the symbol. All right. I don't think we're done going down here. You know, relative to the 2 standard deviation Bollinger Band, yeah, we're, you know, quote unquote 2 and 3 standard deviation Bollinger Band. We're oversold, no doubt about it. But we can certainly go down lower. Now we bounced off of a support level. We haven't hit the extreme yet. This would be the extreme down here at around $53 per share. We are here with regard to historical support. Maybe it holds. Maybe we get a bear market rally and then we roll back over. But I think ultimately we're going lower. Ideally, down here. This would be a really nice sound base. A lot of buyers down here. Guys like me, technicians like me, they'd be looking at the support level as a safe place to put fresh money to work in a sector that's hated. And I don't care if the government comes in with bailouts, whatever. I mean, longer term, you need business, you need visitors. And right now, you have Asia going through a second wave of coronavirus, and that is not going to help the hotel chains. And when you take a look at your Stokes on a monthly basis, they're declining. In all probability, will be down below 50 this month. And when you see that and you get a rally, you need to fade that rally first because somebody else will. Rallies tend to fade. So there's more use for the Stokes than just watching for overbought, oversold levels. It's an indicator that you use to help you determine just how severe is the selling momentum. And right now, I'm looking at this Stoke on a monthly basis, and it's flashing red signals right now. It's probably going to get a little bit worse. Doesn't mean we can't have counter trend rallies, but those rallies are to be sold. Weekly chart. So we rallied last week. What did we do this week? We took out last week's lows. So we've already had a counter trend rally, and that rally's failed. We're very close to the lows of the week. I'm a big believer in W formations when you're bottoming out on Stokes. We're not there yet. You saw it back here. You saw it back here. Here to a certain extent. Here, here. Why would this time be any different? Anybody who's expecting a V-shaped recovery on the hotel stocks, are kidding themselves. So in all probability, we could rally today. We could rally next week for all I know. I'm not that smart. However, in all probability, we're going to roll over. We're heading down to lower lows, daily chart. You look at a daily chart, and the first thing that jumps out to me is that, okay, do we put in a higher low here? And that's the $64,000 question. I don't know. The markets will tell us that. All we can do is take our crayon out, pretend that we're Boeing rocket scientists, put some lines on a chart, and say, okay, I dare you to cross this line. So if we break below this lower band of support, in all probability, we're coming lower. If we break down below 46.56, Armageddon stuff, we're going a lot lower. Now, if we put in a higher low and we begin to break out and above this upper band of resistance, which I highly doubt we're going to do, well then, we're probably going to rally even further. But I think at current, we need to trade the trend. And what's the trend? Despite the fact I'm a contrarian, we do not ignore the trend. The trend in the short term and intermediate term is to the downside. So in all probability, we're going to break here. Will, are you going to trust every hotel room will be... Yeah, good point. You're a nut like me. No, I think the same way. OCD. Jedi. I think you asked for this last night, Gold. I'm sorry about that if I didn't do it last night. I even wrote it down. So, Barrick, one of the larger players in the gold mining sector. If you had to buy an individual name, I wouldn't personally, yeah, because I don't have to. I don't want to have to worry about whether or not there's gold in the ground. I'd rather buy an ETF and let a manager worry about it. So on a monthly basis, and remember, I'm bullish on the miners, but I'm not ignoring. I was even a little bit negative on the miners last night with regard to the charts when I was going over GDX. So I'm not going to speak my book here. I don't like the topping tails on these candlesticks. February, very weak. March, weak. This month, obviously very early in the month, but we're already flashing a topping tail. So what I would do here is quite simple. Again, take my crayon out. This is concerning. Possible bear flag. But I'm looking for bear flags all over the place now, so I need to acknowledge that fact. So where we're at in history at current with Barrick is that we are leaning into a ton of overhead supply. Right, so where we're at current, we were back in 2016. Prior to that, we were at resistance back in 2013, 14. Prior to that, 2008. Prior to that, 2004 and 5. So we have a lot of sellers up here. A lot of people who bought back here, they're getting made whole now. They want their money back. They've been waiting a long time. They want their money back. When would I be a buyer? We need to see it close above 20. We're not that far away. It's not too much to ask. Now, if we break this lower band of support, well, then it's not going to be good. It's going to get very, very ugly for the gold miners real fast. So if GOLD goes, Barrick Gold goes, that means the entire sector in all probability is going to go. We're looking for a close on gold, Barrick Gold, above 20. Consolidation, and then we'll take a run at 22. We close above 22, then we have a new bull market on our hands. Let's go to a daily chart. Tons of volatility in here. So again, this 20 mark is critical resistance. And we've been unable to hold it for any length of time. So 20 is the number I'd be looking for on Barrick to close above before I added or initiated a new position. I'm going to go over one more chart. Hey, good morning, Pat. Actually, I'll go over two for Will and Kat here, and then I'm going to sign off. We'll take a look at the non-farm payrolls. Oh, they come out in a minute. Could somebody drop a note in on what? There's a lot of people on. If I could ask you to hit that like button, I'd appreciate it. Subscribe, share with a friend, all that good stuff. If somebody could drop a note on what non-farm payrolls are in the chat box, I'd appreciate that. You're welcome, Kat. I will go to ladies first. We'll do Kat first. Netflix. I think this has been a net positive for Netflix. What may hurt them is bandwidth. Yeah, holding up very well. So would I short it here? Probably not. I mean, especially with the second wave of corona hitting Asia. I don't know if that's been validated. Oh my God. 701,000. Oh my God. 4.4%. That's still historically low, but that's a heck of a jump. Let's check out what the futures. Cat, we'll come back to this. I just want to take a quick look at the knee-jerk reaction of the market. Let's scroll down here, go to a 15-minute view. They're reacting as if this is a surprise. I don't think this could have been a surprise. But again, I think it goes back to things get real fast once they hit the headline. We're holding support. But this is only a 15-minute chart. And I'm no day trader. So the knee-jerk reaction was negative. Therefore, I think that we may get a rally. Usually the knee-jerk reaction is wrong. They're fighting back a little bit now. Let's check the S&P. You know, I'll go to the NASDAQ. It's in front of me here. Yeah, knee-jerk reaction was down. So I think that we may rally. I don't know how sustainable the rally is going to be. Let's check out the S&P. Probably all going to look alike. Yeah. All right, so we're coming off the lows. The knee-jerk reaction was negative, and again, it's usually the wrong reaction. Let's check out how gold is responding. And we'll go back to Netflix. I didn't forget about your cat. Gold really caught a bid here, man. Yeah. Perhaps knee-jerk reaction is inaccurate here, but gold is certainly taking this confirmation that things are bad and running with it. Incredible. Crazy times. All right, let's get back to, let's take a look at Netflix in the pre-market, and then we'll go back to the static charts. We're down slightly from yesterday's close, not much. Static charts. Would I short Netflix? Probably not. It's a beneficiary of what's going on right now. You know, we broke out here in February, did a retest. We're holding it. Netflix is holding in there very well. Here's a beautiful W formation. This would not be on my list of stocks to short. Weekly chart. We're at resistance. But the stay-at-home lockdown narrative is a good story for Netflix, along with the food stocks. And honestly, I would be looking at Kimberly Clark and baby products longer term because I think there's going to be a baby boom here. Everybody locked down with nothing to do. Daily chart. No, this is not a short. Underlying strength on a macro, monthly, weekly basis. Yes, you have resistance above, but it looks as though we're getting ready to move on to new highs here. So I'm not a proponent of shorting stocks that are making new highs. So I would avoid that trade. If anything, somebody's looking to buy the shares, it looks like we're setting up for a move higher. This is a 4-hour chart. I mean, I want to pick off something here as being a negative. I can't. Netflix looking pretty good. Honestly, I like it. I like it as a long. Avoid SPXS. That's the short ETF of the S&P 500. Right now, I would, until the market sends you a signal that we've hit resistance, and I'd be looking personally at a bearish reversal bar on the day, something to that effect. And that would be send me a signal that the market is finally starting to peter out. I mean, jobless claims are at 10 million, unemployment claims, I should say. And we just got a rise in unemployment data. What are we doing? We're rallying off the lows. So this is priced in. You know, people all too often, they trade the headline, and they don't need to be aware that a lot of this is already priced in. You know, is a worse number next month priced in? I don't know. I don't think that it is. But at current, it looks as though we're going to move higher here on the S&P 500. So would I go buying SPXS? No, not right now. I'm going to leave off with I got a lot of requests coming in here. All right, I'll spend a couple more minutes here. And if I could ask you to hit that like button, I'd really, really appreciate it. And I'll go over a few more symbols. I keep complaining about this. I got these kids that tell you how to day trade and make $100 a day on YouTube with like 15,000 views. And I can't get 2,000 subscribers. Ticks me off. What do we have here? Let's go over WMT before I forget that. Walmart. Walmart is in an uptrend. It remains in an uptrend despite what we've seen of late. And we've broken out above resistance. This is a monthly chart, so we don't know whether or not it's going to close here. It's only the third weekly chart. It's a pretty chart. I mean, clearly you have rock solid support down here. You do have resistance above, but we're flirting with a breakout this week. We're already above it at current, assuming that we close higher on the day, or at least where we closed out yesterday. We will have a breakout. I think the play here is that you want to look for, assuming that we break out this week, look for a retest of support next week. Open up a position there or add to your position with a stop loss right below. What's the support level here? Around 117.24 with a stop loss right below that mark. but it's a good looking chart. Here, exactly what I'm looking for on a weekly chart we saw on a daily chart. We broke out on the 2nd. This morning, we're pulling back and doing a retest. This is a pre-market activity. We have broken out on RSI. We're doing a retest. Watch for hook up. I think Walmart's going up higher. You have some resistance up here. But I think ultimately, especially in this environment, and people are losing their jobs, for God's sakes, they're not going to be able to afford much. So who's going to benefit? Walmart. And their online business has picked up quite a bit as well. ABT. Abbott Labs. We have some good looking charts here. Abbott Labs looking really good. Got hammered in February. No new lows in March. Bullish reversal bar so far in April. It's early though. Weekly view. Down on the week. We have some moving averages up here that are acting as resistance. Stokes making an effort. To put in a higher low. You have RSI, which is broken out. I would expect a pullback here and a retest of 77.81. That would be my entry point. A retest of support. Watch for your RSI. Watch for it to pull back. And then I'd enter a limit order opening position on Abbott with a stop loss right below. If it breaks the support, we close out next week down below 77.81. I would exit the trade personally. Daily chart. We broke out yesterday on a daily basis. Watch for pullback. That's the play here. You'll get a validation of whether or not this breakout's for real. Wait for that validation. TGT. Interesting. Let's go to the monthly chart first, though. Get a feel for where we're at. No new low this month so far. That's a positive. I'm not loving the Stokes. Not loving the weekly chart. Because you're getting these topping tails. And if you're wondering, why does he keep talking about topping tails? It's because when you look at a chart and you see that you have wicks, whatever you want to call them, shadows, topping tails, call them cupcakes, it doesn't matter. What it means is that you have sellers above. They're selling strength. But you do have some bottoming action here as well. Support at 89.60, which is good to see. We're in a trading range. We haven't broken out yet on a weekly basis anyway. Daily view. Nice consolidation here. And this is where we started off. So the daily chart is not looking bad. Very tight consolidation. What I don't like is this. I don't like rounding tops on my Stokes. And in fact, you could argue that you have a head and shoulders setup on your Stokes. Left shoulder, head, right shoulder. And yes, you do get head and shoulder setups on Stokes. And if we break, this is going to be an ugly sell-off. So me personally, I would not bet that we're going to break out. I would buy the breakout. Buy the breakout, then get a retest. If it holds, good stuff. Thumbs up. Get long all day long. But I would wait for that breakout. Let me bring up Target on a stockcharts.com. I want to take a look at those Stokes again. Yeah, here you go again. Rounding top. We're not down below 20. But it's concerning. It's an interesting trade, I'll grant you. Nice consolidation here. MACD, very mature. This just needs to get resolved. This bothers me. I would see how we close out the day. Do we break out and get a retest? Not even today. I want to see how it trades by Monday. So I would just sit on my hands here. You're welcome, Will. All right, let's take a walk back through the futures. Now that they've settled down some. The knee-jerk reaction was inaccurate, short term anyway. This is a 15-minute chart. The E-minis, S&P E-minis. So here's the knee-jerk reaction. Wrong. We reversed to close positive. Stalling out here a little bit. The Russell 2000, small caps. Again, same deal here, where we had a negative, or inaccurate, I should say, an inaccurate knee-jerk reaction, and that's the norm. There's nothing, usually when you get this is what I always teach members, is that when you get economic data or you get whatever the market widely expects, and it gets announced and you get the reaction, it's probably the wrong reaction. You see it all the time with Fed announcements. So let's see whether or not we break out to new daily highs before we draw conclusions about whether or not this market's going to rally. I would just be sitting on my hands at current. Let's go to Nugget, of which we are long. I saw that Pat just dropped a note in the box. Yeah, we're back above 8. Let's go to the GDXJ, of which we are also long. And the only reason why I diversified into the GDXJ is just I just don't like how Dirextian is managing their funds. They really need to get their act together. All right, so we're seeing a little bit of a bid on the miners. Let's check out gold. Did it hold that gain? Yeah. For now, anyway. I'm wondering, though, at what point in time does the dollar become a factor, if ever, on the price of gold? Let's see if we have anything else in the chat box. Oil. Thank you, Kat. I forgot all about oil. Yeah. Nice little short squeeze going on here. I think we have a lot more upside here on oil. I was talking bullish about it last night. I don't think I'm going to get my opportunity that I wanted for a good entry point. That ship may have sailed. We're very extended here. I would not chase it. We could head higher, but I think we're going to get a correction because you're getting a lot of positive news on oil, and that's putting a bid under it. That May jobs report was bad. Forget this. We already know this. And next week, when the headlines begin to disappear, we may get a pullback on oil. That would be an opportunity to open a new position. So more to come. JP Morgan, we'll leave off with JP Morgan. And pre-market down a bit. I'm not loving the banks, especially the smaller regional banks. Let's do a monthly view. The best that could be said about JP Morgan on a monthly view is that we don't have a new monthly low yet. I couldn't buy the banks. I have no idea who's going to get hit by the damage that's being done to the real estate market. In particular, commercial real estate and what appears to be looming in the residential market. So here we are. I think all we're doing is we are consolidating here a bit. We're seeing a lot of topping action. Every time somebody tries to bid JPM up, they're selling into it. There's a very strong possibility that we break support and we move lower. So I'm not loving the weekly chart in terms of price action. Your Stokes, they're beginning to mature here a little bit, but that doesn't mean you can't get another leg down. All too often, people believe that because you have Stokes down below 20, it's time to buy because they're oversold. Way too overly simplistic, ridiculous, to be honest with you. Most of your damage that gets done on a stock price is when the Stokes are down below the 20 mark. They could stay down there for a long, long time. So avoid rules of thumb that are ridiculous. Now, the daily chart, we had good price action yesterday, an outside reversal day, along with the rest of the market, at least the large caps anyway. RSI rising, possible higher low here on Stokes. That would be bullish. Let's see how we close out the day. We may get a rally here, salvaging the week, and this weekly chart may look a lot better. But at current, it doesn't look good on a weekly basis. But on a daily basis, you're seeing the possibility anyway of a rally year. But I would wait for a breakout or in a triangle formation. If we break the support level, basically the lows of the day yesterday, which was at 82.96, then we're probably coming down here to this lower band of support, and that's a lot lower. So be very, very careful here. I don't like the banks. Sam, I already did Walmart. Just went over that one. Folks, I want to say thank you for joining in. If I could ask you to smash that like button, kill it, destroy it. Help me compete with these younger dudes with the day trading videos and how I'm going to make $100 a day, 7 days a week, even though the markets are closed on the weekends. Those guys are amazing with 13,000 views, and I could use your support. Thank you very much. And thanks, Eric. I appreciate that. Blessed day to you as well. And everybody, be very, very safe out there. And I'll talk to you soon. Have a great weekend.